Thank you so much, Barry. Let me just share my screen. 1 second. I hope the screen is visible.
We're still waiting. There's probably just a slight delay. So as soon as it's visible, I will give you. Okay, the screen. Yes, we're now seeing it. Yes,
Okay,
you are
great.
now ready to go.
All right. Thank you. I was really impressed by Nivea's presentation, and I hope I can add some more interesting perspectives from the Indian side. But before I start, let me just thank the CARICOM Competition Commission for inviting me and giving me an opportunity to share my views and a perspective from India. It's a real pleasure and a real honor. So, ladies and gentlemen, distinguished fellow panelists and officials, in my talk, I'm going to cover essentially very broadly why consumer protection is different in digital markets at a very intuitive level. What are countries seeking from digital communication technologies? Why consumer trust is important? And then share some very unique consumer-centric solutions from India. I think what has happened, particularly in developing countries, is like while the rest of the world is marching forward and they've moved ahead from universal access and services to broadband infrastructure, universalization, we are now at a stage where most countries are at the third and the fourth pillar. That is, they're thinking about digital transformation and they're thinking about very futuristic technologies and they're looking largely at artificial intelligence today. But for developing countries, I think we're grappling with all four pillars at the same time. So most of us have a long way to go as far as universal access and services are concerned, as far as broadband infrastructure is concerned. At this very same time, we also cannot be left behind as far as digital transformation and digital enablers are concerned. And what impact does this have on different aspects of consumer protection is what we're going to see. So the important thing for us to remember is that all consumer protection, particularly in electronic communications and its new avatars, the internet and the emerging technologies, all start with this basic prism. We were always focused on price, quality, safety, and inclusion, and we still need to continue to be focused on these. These continue to be very, very important for us. However, what has happened now is that, as the previous speaker mentioned, the consumer is not just a citizen and a voter, very important, of course, as a citizen and voter, but the consumer in digital markets is also a value creator. Imagine a LinkedIn. What would LinkedIn be without the content that you and I create on LinkedIn? But while we create this valuable content, we also become data subjects and we share a lot of information about ourselves, which then is used. Yes, it is used to advertisements and to customize services for us. And it is also the reason why so many services are free online. Where the nature of consumer protection then changes. But the consumer continues to be very important to lawmakers as the voter and continues to be very important to states, regulators, and policymakers as the citizen. So I have no sympathies. I have the digital regulators and policymakers have my full sympathies because the gamut of policy issues that we have to deal with now is just phenomenal. I mean, look at the slide. It's not just price, quality, and safety and inclusion that we're looking at. There are so many different facets of digital regulation that we are grappling with, and it's no wonder then that we have so many regulations and we have so many different regulatory authorities. And I think AI and emerging technologies have captured our imagination today because we're going into a future which is going to look very different. Nobody knows what it's going to look like, but it is clear that we be very careful as we step into that future. But there are lots of boxes over there which are question marks because we don't know what else is coming up. All we can say is that the foundations of consumer protection don't really change, they remain the same. So, what are these foundations? For one thing, the three critical actors over here, the state, the consumer, and the industry, all need to trust each other. And without this trust, digital transformation is not possible. If this doesn't sound plausible, I can explain it more. Can you imagine how you could possibly achieve universal to come from both the public and the private sector? Innovation has to come from the private sector, from the public sector, and it requires an environment where there's regulatory stability, there's regulatory certainty, and people feel like investing and they feel confident about investing. That's a question of trust between the state and the industry. The next thing that you do is you want to have availability of digital communications and services. You want it to be accessible so that people can actually use it. But people may not still use it. They won't use it if they feel it is overwhelming, they don't have the digital skills to use it, or they don't trust it. Adoption hinges on trust. You can enforce or force people to adopt digital services, but the kind of digital transformation that governments want and the kind of digital transformation that will really benefit consumers and achieve the full potential of what digital services can offer requires trust. And that is why trust becomes so very central when we talk about consumer protection or we talk about digital transformation. Now, when you are trying to regulate in the digital sector, it's very important to factor in stakeholder motivations. And I think this lies at the base of good regulation. We're all out there to solve problems and to achieve our goals. But these three stakeholders have to understand each other and work together. Only then can we actually achieve the kind of digital transformation or the kind of potential that we're looking at. Now, the ideal situation would be that industry brings in the innovation, and that innovation is good innovation. It brings in the investment, brings in useful services, and avoids harming consumers. The other side of the situation from the regulatory point of view would be that there isn't over-regulation. It's just the right amount of regulation. It promotes investment and innovation. There's regulatory certainty, which brings forth investment. And of course, the regulator is protecting consumers. The problem happens when this dialogue breaks down, when industry actually operates in a way that is in a way selfish because they don't realize that their short-term profit motives can actually harm them in the long run. Because if the consumer turns away from digital, and actually I was reading somewhere that the World Economic Forum has reported that a lot of students have stopped using smartphones and they've switched to dumb phones because they don't want the distraction. Now, perhaps if there wasn't so much of behavioral advertisement and there wasn't so much content which is designed to hook us, and as the previous speaker mentioned, the deceptive patterns or the dark patterns, perhaps we wouldn't be forced to take such severe measures. So I'm sure industry doesn't want us to stop as consumers using digital services. Neither do the governments want it, and neither is it good for consumers. So this dialogue, when it breaks down, then the dissonance steps in. And then what happens is you have a situation where industry could have corrected itself. They didn't course correct. They did too little and too late. The regulatory response was not fast enough to protect consumers from a lot of harm, which took place over a very long time, as we've seen in the case of a lot of enforcement actions which are happening now, a lot of regulation that is happening now, which is perhaps rather late in the day, but there are information asymmetries and regulators do take time to catch up, and regulation is always a few steps behind technology. But when the regulatory response comes, is it going to be too much? And is it actually going to harm innovation and harm competition? Because we mustn't forget that over-regulation can actually act like an entry barrier in markets and prevent smaller firms which can't cope with that kind of regulation from actually competing in the market. Of course, a lot of the regulation that's coming in today, if you look at even the European Union, it is asymmetric regulation. So it's different for larger platforms and gatekeepers, and it's different for the smaller enterprises. But whatever it is, small enterprises do get stuck when there is too much of regulation. So there's a very fine balance that regulators have to strike, and it's not an enviable position where you're trying to achieve innovation, competition, trust, inclusion, make sure that the service providers continue to invest and innovate, make sure that the consumer is protected. And it's a very, very difficult balancing exercise. Now, coming to India, we have been adapting to what's been happening in the digital world, just like the rest of the world, perhaps a little slow, but we have been there and making changes. So, one of the first changes that we made was to make sure that the kind of self preferencing that takes place on large e commerce platforms is stopped. And therefore, a certain change to the rules was brought in so that you could not actually sell your own products. And we say that we want a marketplace only model, particularly when large foreign platforms are concerned. The other thing that we did is we changed our consumer protection e-commerce rules. There are lots of changes. I've given you only a very small extract of them. The idea is to protect consumers and make sure that there aren't deceptive practices, there are no fake reviews, funny kind of sales are avoided, and most favored nations, it's MFN kind of statuses, and not allowing, enough sort of safety to smaller vendors and sort of misusing their data. And there are lots of other things which are built into these kind of rules. In terms of competition, we've changed our Competition Act very recently so that we are able to capture digital mergers, which were earlier escaping notification because they were not meeting asset and turnover thresholds. But now we have a deal value threshold so that we can capture digital mergers. Certain other changes have been made to the Competition Act. And then very recently, a parliamentary committee reviewed anti-competitive practices of big technology platforms. It noticed that there are a certain malpractices which are happening, which impede competition in the market. As you can see on the screen, nothing very unique to India, since these platforms are global, the internet is global, the findings were also very much in tune with what is happening in the rest of the world. But what we are also doing is we are coming up with the Digital Competition Act, which is again going to complement the ex post competition law regime, and we're going to have a series of ex ante rules, pretty much similar to on the lines of the Digital Markets Act, I would think. Apart from that, we have another regulation coming into the picture, which is the Digital India Act. It is very wide in its scope, very comprehensive, and as you can see from the portions I've highlighted on the slide, ethical use of AI, personal data protection, ensuring that the internet remains open, that consumer choice is protected, competition is protected, diversity is protected, there is fair market access for smaller producers, there is ease of doing business, you're safeguarding innovation. So that complex mix of goals is trying to be achieved through this act. Again, looking at AI, security, content monetization, and a whole range of issues. Again, I've just pulled out an extract. But here is where I'm going to deviate a little bit and take you somewhere else. I call this regulation plus plus, because if you think how we govern the digital world, it's not only laws and regulations that govern the digital world, it's also three other things: norms, architecture, and market. And what do I mean by norms? If we think about protecting children, it's almost every jurisdiction and every regime across the world believes track children's activities online. That's a norm. It's a very universal and global norm. When you talk about markets, when we binge watch on the net on Netflix, what we're doing is we're just like we're paying our broadband subscription, we paid for the Netflix subscription, and now we enjoy. But what if you were to pay separately for every episode you watched? You wouldn't binge watch. So that is how the market affects our behavior. So we can use markets also to change people's behavior and to change the level of competition or consumer protection in the market. The other thing is architecture. What do I mean by architecture? So when regulators talk about privacy and safety by design, we are talking about architectural choices. But what I'm going to take you to is an architectural solution. It's a combination of markets, architecture, and regulation and norms, where the government actually cooperates with the private sector to do something which preserves innovation in the market, preserves competition, and actually enhances competition in the market. So that's what we're going to be looking at. And for that, I'm just going to share a video with you, and I hope it works.
India's ambitious project Open Network for Digital Commerce, or ONDC, which seeks to rival US giant Amazon and Walmart-backed Flipkart, went live in Bangalore recently, and it uses India Stack as a platform. India Stack is a moniker for formidable digital infrastructure which includes identity, payments, and data management. Governments, startups, and developers used this infra to accelerate India's shift to not only a digital economy but also an inclusive one. The India Stack infrastructure has revolutionized the way both small and big businesses transact with their customers. According to the International Monetary Fund, it has widened access to financial services in an economy where retail transactions are heavily cash-based. India Stack was built on layers of technologies and frameworks such as Aadhaar, UPI payments, digital locker, and others. The foundation of India Stack is Aadhaar, which helped the government create a biometric database, and its linkage to bank accounts accelerated the financial inclusion and improved service delivery. Over 1 billion Indians have an Aadhaar card with a unique identification number. For years, government welfare delivery was not efficient. Aadhaar not just improved the last mile delivery, but also became the basis for many flagship schemes such as Jan Dhan Yojana, Kisan Samman Nidhi Yojana, etc. Then came the Unified Payment Interface, or UPI, that allowed millions of users to transfer payments instantly. Fintech companies with digital wallets made transactions instant and simpler. Currently, UPI monthly transaction volumes are over 5 billion. The third layer in the India Stack project is the introduction of DigiLocker, which allows verification of digital documents without physical presence. People can upload their key documents such as Aadhaar, PAN card, driving license, etc. in the DigiLocker and use them for verification as and when required. For instance, digital lenders could quickly verify the documents and sanction loans based on the credit history. The fourth layer, which is not yet fully operational, is to enable secure movement of data with the consent of users. This layer allows data to move freely and securely to democratize the market for data.
But I hope it was understood. Essentially, this video tells us about the India Stack, which is it is a project, is a series of projects actually, which have been done in cooperation between the government and the private sector. The innovation has come entirely from the private sector. What the government has done is facilitated and created the regulatory backing that is required to be able to roll out this. It has the unified payment interface. It has an identity infrastructure. And the two things combined have revolutionized financial transactions in India in a manner where people feel safe. So, it is used every day by billions of Indians for billions of transactions. The beauty of all this infrastructure is that these three things, they're totally unbundled, interoperable, and decentralized. So you can have any number of apps running on the same infrastructure. It's a platform which is not owned by any one private entity. It's always a consortia of multiple players. Nobody is actually profiting from it. At the same time, there are a lot of private innovations which are riding on it and providing very innovative services to consumers. So we have, you saw there's a DigiLocker, which is like a cloud, which is available to the public to use. So you have public infrastructure provided by the private sector. What this has done, as I mentioned, has completely revolutionized financial transactions in India. So there's been a 7 times growth since 2019, and the volumes are absolutely stupendous. But what is interesting is this. So in most markets, you would find that, for example, in India, Google is it leads in search. You could have with the combination of WhatsApp and Facebook in social media being dominant. But because of the digital public infrastructure, you have multiple players in payment apps. So the consumer has plenty of choice, and still you can see that Google Pay still has a large share, which means it does provide a good service. But you have another company which you haven't heard about, but which exists in India, which is competing head on with Google Pay. So this is what happens when architecture is combined with markets, is combined with norms, is combined with regulations to create competition. So this is a unique way of actually achieving the same results, and that is what I was keen to share with you. So it also does another very unique thing. It balances that imbalance of power that all countries across the world are today grappling with in terms of so many different types of regulations, whether it's Digital Services Act or Digital Markets Act or number of acts coming up in Australia or UK or in India for that matter, or in Africa. So what here it does is it gives more power to consumers because they have more choice. Many more small businesses are able to reach consumers, and it sort of takes care of this balance. So this I have shown in the case of e-commerce, because we mentioned in the video that there is a network coming up. It actually has already come up. It's called the Open Network for Digital Commerce. So what it's doing is creating a common platform where small and big vendors all will be available to the consumer, and the consumer can actually pick and choose the payment service that they want, the delivery service that they want, and they can see compare products across platforms. So it's going to look something like this. You have Amazon and a whole lot of other apps, which are even Indian apps or foreign apps, all together in one place. So it gives the consumer a lot of choice. It gives small vendors from very remote rural areas also an opportunity to reach consumers without having to depend on a large digital platform or to be dictated by the terms and conditions of that large digital platform. Now, this is what I call a regulatory industry handshake, where the industry willy-nilly is brought onto that platform by the government, and the regulator continues to foster innovation, creates consumer awareness, and you are actually through a regulatory mechanism, through a lot of pushback from civil society and citizens when things go wrong, you're actually creating the right conditions for everything that we want to actually flourish in digital markets and to be able to achieve the kind of consumer-centric digital transformation that we need. Thank you very much.